All right, let's move on. We've talked about direct labor, and we talked about direct materials. And although the computations for those can become somewhat involved, they are very, very straightforward because they're direct materials added into the production process, and the labor that we've discussed has been of a direct nature as well. So somewhat complicated in the calculations perhaps, but at least what we're doing is somewhat straightforward with those. Then we move into other costs that are indirectly related to the production of a product. In other words, these are product costs other than direct materials and direct labor. So this is going to be everything from indirect labor, utilities, depreciation on the factory building, all of these sorts of things. So let's see here. It says here the factory overhead cost budget estimates the cost for each item of factory overhead. So there's going to be a lot of them needed to support budgeted production. What they're saying here is direct materials, direct labor alone won't cut it. We won't have a finished product if that's all we've got. So because we generally have more components to the factory overhead cost budget, it says here factory overhead costs may be supported by departmental schedules. And that makes sense because we need to know not only what our utility costs are, our indirect labor costs, indirect materials costs are in total, but we also need to be able to align those with the various departments. For example, the cutting department, the sewing department, the assembly department, whatever the case may be. And that allows us to evaluate these costs during the year. Are we doing a good job, or do we need to make improvements? So here we have a factory overhead cost budget, and notice that if we start right here with indirect factory wages, and then we go all the way down here to insurance and property taxes, these are all of the different costs that are associated with the product. Okay? Whatever it is we're making. In this case, we're making wallets and we're making handbags. So we have indirect factory wages such as maintenance employees, janitors, those types of things. They're not making the product, but they're working in the factory area. In fact, that looks like it's our biggest cost. We have supervisor salaries. They're not actually producing anything, so we can't call them direct labor, but they are making sure that things are getting done. We have our utilities, depreciation of the plant itself and equipment, indirect materials that may not be able to be traced directly to any one unit. Well, we've got maintenance down here, so that's another classification. I put maintenance up here in indirect factory wages. I guess it kind of depends on what type of maintenance we're talking about. And then finally, our insurance and our property taxes. So I want to make it clear that both with this item here and then also the depreciation item, these are expenses that pertain specifically to the factory setting. So we may have property taxes for the entire company, but we have to split out the portion that is related to production to make it a part of the factory overhead cost budget. Looks like when we take all of these things combined, we come up with a little bit over $2 million. So not pocket change. All right. Cost of goods sold budget is merely all three of these things that we've looked at: direct materials, direct labor, and the factory overhead budget. And what makes the cost of goods sold budget somewhat complicated is that for for all of these items, such as, well, for direct materials and so forth, we also have to account for our desired ending inventory and take account of our beginning inventory. So there are several steps, so let's go ahead and look at it now. Well, before we do that, we do need to introduce a couple of things that we haven't talked about. You know, before we talked about our desired ending inventory at the end of the year, and then what we had at the beginning of the year. Now we're gonna take that and multiply it by our direct materials cost, and we're actually gonna assign a dollar value to beginning inventory and a dollar value to desired ending inventory. So this is clearly an estimate. This number here is going to be more of an estimate than this number here, more than likely. We also have to do a couple of other things. We also have to look at our beginning work in process and then our desired ending work in process. So these are items that are in the production process, but at, you know, for example, at, let's say, December 31st, they are not yet complete. We also have a beginning finished goods inventory and a desired finished goods ending inventory. It looks like in this case we're wanting finished goods to go up significantly. Okay, and we're going to need all of this information in order to accurately come up with our cost of goods sold. Well, we're putting a budget together, so not cost of goods sold, but we're going to need this information to come up with our cost of goods sold budget. All right, so again, a lot of information here on this slide, but we've already calculated all of these numbers. Some of them we just did on the looked at on the prior slide, but others we did in earlier videos. So we're going to start off here. Our first item is our beginning finished goods inventory. We're going to plot it over here in column F. This is what we expect to have finished goods, just haven't sold quite yet at the beginning of the year. We have our work in process at the beginning of the year. That was 214.4. See, there it is on the previous slide. And we also have our direct materials inventory. I believe it was 18,000 units of one thing, 15,000 of another, and the value associated with that. So with that in mind, let's take this beginning direct materials inventory of 99,000. We're going to add to that the 2.5875 figure from our direct materials purchases budget, and we're going to come up with cost of direct materials available, $2,686,500. But we also we said that we wanted to have $104,400 in ending direct materials. I want to go back real quick. Where is it? Right here. So if that's the case, the cost of direct materials placed in production for this year, for this upcoming year, $2,582,100. Our direct labor is a little bit easier because we've already done all the hard work. We just take the total budget amount and we plot it next, and we do the exact same thing with factory overhead. We've already calculated that a few slides back. We add these three figures right here, and we come up with our total manufacturing cost of $9.5 million. We're going to add to that work in process, beginning work in process up here, and we come up with total work in process during the period of 9,737,180. However, we also have to subtract out from that our desired ending inventory for work in process, 220,000. This gives us a very, very important formula called cost of goods manufactured. In this case, it's $9.5 million. Okay, so we take the three components, our direct materials, direct labor, and factory overhead. We're going to add to that our beginning work in process, subtract out our desired ending work in process. So if we do all of that, our next step is we're going to take this cost of goods manufactured, we're going to add our finished goods inventory that we had at the beginning of the year. That's going to give us cost of finished goods available for sale of $10,612,780. So yes, this is the figure available for sale, but if we recall, just one slide ago, we said we wanted to have ending finished goods of $1,565,000. So these are goods, yeah, they may be available for sale, but we're not actually planning on selling them. So we merely subtract the desired ending finished goods dollar figure from the available for sale figure, and we come up with our cost of goods sold budget of $9,047,780.